Assalamualaikum, my name is Muhammad Shamin Ahmad and I'm gonna talk about Caterpillar Company overview, which is introduction. Caterpillar Inc. is an American multinational company founded in 1925. It's well known for its yellow machine and the chart logo. The company design and manufacture heavy equipment mainly for construction, mining, energy, transportation industry. Today, Caterpillar operate in more than 190 countries worldwide. Its main business segments include construction industry, research industry, energy and transportation, and financial product. In 2023, Caterpillar records strong financial performance with a profit of 10.3 billion US dollar. The company is highly competitive due to its strong global brand, wide dealer network, and digital innovation. However, because Caterpillar operates internationally and earns revenue in many foreign currency, it is exposed to exchange rate risk, which can affect its performance. Thank you. That's all from me.
For this session, I will explain about forecasting exchange rate for Caterpillar Incorporated. Exchange rate forecasting is very important for Caterpillar because it operates globally and earns a large portion of its revenue in foreign currencies. Although Caterpillar reports in US dollars, changes in exchange rates directly affect its pricing, cost, and profitability. A stronger US dollar can reduce competitiveness in overseas markets, while a weaker dollar can increase foreign revenues when converted to US dollars. Caterpillar used two main forecasting approaches. Fundamental forecasting focuses on economic factors and is useful for long-term planning, but less accurate in the short term. Market-based forecasting relies on market data, such as forward exchange rates, and is effective for short-term decision-making, though it can be affected by market volatility. Lastly, exchange rate forecasting involves ethical responsibilities. Caterpillar must use realistic and transparent assumptions to support sound decision and protect stakeholders' interests.
For translation exposure, Caterpillar faces risk when consolidating the financial statements of its foreign subsidiaries into US dollars. Since Caterpillar operates globally, changes in exchange rate can affect the reported value of its assets and equity, even though there is no impact on actual cash flow. For example, if a subsidiary in Brazil has assets valued at 2 billion Brazilian lira, a depreciation of the real against the US dollar would reduce the reported assets value when translated into USD. This results in a translation or paper loss which affects Caterpillar financial position but does not involve any cash outflow. Therefore, while translation exposure does not directly impact cash flows, it may influence investor perceptions and stakeholder evaluation of Caterpillar's overall financial performance.
This slide shows Caterpillar's exchange rate risk using scenario analysis. About 53% of its revenue comes from outside the US, while reporting is in USD. Assuming foreign currency depreciate 10% against the USD and still remain constant, foreign revenue is about USD 34.3 billion, will fall by roughly 3.4 billion USD. This reflects currency translation effect, not actual sales decline. A strong US dollar reduces report revenue and profitability as many key costs remain USD dominated. This leads to lower profit, EPS, and shareholder value. The main risk is economic exposure, which affect long-term competitiveness. To manage this, Caterpillar used financial hedging and operational strategy such as diversifying markets and production.
To conclude, Caterpillar operates in many countries, which makes the company highly exposed to exchange rate fluctuations. Changes in many currencies like the euro, yuan, and Brazilian real can affect its cash flow, production costs, and global competitiveness. To manage this risk, Caterpillar uses financial hedging tools such as forward contracts and swaps for short-term exposure, while also applying operational hedging by producing and sourcing locally. This helps match costs with revenues and reduce long-term risk. In the future, Caterpillar should improve its exchange rate forecasting, increase localization in key markets, and ensure all hedging activities are used only for risk reduction. By maintaining transparent reporting, The company can protect its reputation and remain competitive globally.